Hi guys, welcome to season 2, episode 9.
Hey, we're getting there.
Yes.
Fantastic. I think this is our 20th podcast.
20th
Yes, because we
podcast.
did 11 in season 1. So we are well done.
Yeah, we've come a long way.
Well, definitely.
We've come a long way, and
Absolutely. That's good.
it's nice to see that the podcast is growing. More people are, viewing
Yeah,
what we do and engaging with us, and it's really nice to see at the end of the
I
day.
like it. I think it's fantastic.
Definitely.
Great.
So
we're talking about today. What's the topic today, Sonia?
So basically, today we're just going to cover legacy planning for landlords.
Okay.
We have something in store, but we'll probably say that towards the end.
Yeah. So watch all the way.
The podcast.
Watch all the way. Stay with us.
You know what? We'll probably put it in the description as well, so they'll see it in the description. I'm sure.
Well, maybe not. We'll see. But make sure you stay with us to the end.
Yes. So to begin with,
yeah,
I feel like I'm missing something. Am I missing something?
No.
Okay.
No.
So to begin with, the 5 facets to
12.
Well.
Yeah.
So
actually, yeah. So
okay,
before you are missing something. Okay. So one thing that we come across often with planning, because we speak to a lot of landlords, is they just, if I'm being very general, there's no planning involved. It's very immediate. So just buy properties, income coming in, tenants are correct, minimal tax. So you're either doing it residential or you've got a limited company, which is fair enough, or SPV. And then finding more sophisticated ways to buy property, which is fine. So you're accumulating income, which is fantastic, and you're keeping income tax to a minimum. But what happens when you want to transfer that wealth? So because we are all about generational wealth and helping business owners, and landlords are business owners. The tax man considers you to be investors, but you run the business, you're making the money. It can be stressful being a landlord, and normally as a landlord, when I was a landlord, we did it because we want to make money, and we ultimately owning land is a good thing. So we want to pass it on to our family members, to our children, to our loved ones, so that they have a legacy to maintain.
Mm-hmm.
Or we want to set it up and then they've got some, massive income or funds, capital to utilize for wealth. So that makes perfect sense, but no one's really thought it through. So with a regular business, you prepare a business plan. Most business owners have an exit plan. They know what if it's a lifestyle business or they're going to sell it on or something like that.
Mm-hmm.
Landlords, in their minds, yeah, it's my pension, then I'll pass it on, but they haven't actually done it pragmatically. And then when they speak to people like us, they realize, oh no, we've got a problem, and how do we deal with it? And so today's session is really to kind of highlight those aspects, and the facets to wealth, as you go into, is a really important mindset. So if you want to continue,
okay.
I know I can ramble.
So the 5 facets to wealth.
Yeah.
So to begin with, that starts with how to make money, how to manage money, how to protect it, how to leverage it, and also how to make accurate decisions to make the right choice.
Yes.
So yeah, basically, if you're a landlord, you really have to consider those 5 facets as well. It's very vital.
Exactly.
Especially if you want to create a legacy and pass on your wealth or your properties, what you've gained, to your children or loved ones. Would you want to expand a bit more on that?
Yeah, I mean, so the 5 facets. So making money when it comes to wealth, because wealth is a learnable skill. Subject to contrary belief, anyone can be wealthy if they just learn some of the basic skills and rules. Yeah. So the 5 facets is that kind of tangible and methodical way of doing it. So to consider, number 1, obviously making money is key. All right, if you want to be rich and be wealthy, you got to learn how to make money, which is fine. And landlords, that's what they do. All right, and then they accumulate property, more rental income coming in, keep costs low, keep tenants happy, make sure legals are in place, decent location, tenants are always coming in, etc., etc. We get it. So that's fine. But then managing the money. So you either got letting agents who understand how to, collect the funds from the tenants consistently, regularly, before even moving to the house, trying to get the right feel for the right tenant. credit checks, income checks, etc. Then you got to next step is to protect the money, which I'll come on to. Leveraging the money, so you might refurb the property, remortgage it, get some money out to buy another one, which is fair enough. So that income game is working, that leveraging game is working, and then information and make sure it's accurate. So we've got a budget coming up. What's going to happen next? How's it going to affect you? When the law changes, how's it going to affect you? So we know, for example, with buy-to-lets, so with landlords, things are changing drastically. How you get tenants, how long you can keep them for, the actual tenancies are changing. Their rights are probably getting more powerful. So if you're not forewarned, you're not forearmed. Coming back to protection, this is where we come in. And it's important that you can transfer that wealth to your loved ones, if that is your intention. And if it's not your intention, how do you maximize that wealth to pass it on some way? Okay, so if you do it in your lifetime, which we're going to talk about, there's challenges. If you do it upon death, there's challenges. Say if you have a death that's premature or accidental, what happens? Have you looked at all of these risks, and are you able to mitigate those risks? So that's why I thought introducing the 5 facets to wealth would be a good start. So when we look at the typical problems I find, and we've talked about it before, because most landlords tend to gear quite highly. The mortgage is on the property. They're not concerned about paying it off too quickly. They're concerned about paying off the mortgage on their main home because they don't really have the understanding about the longer term. They're not really thinking about the longer term. They're just thinking about maximizing income. And when I speak to clients, whether it's landlords or just regular residential, affluent clients, business owners, the mortgages can be a problem. And the reason why the mortgages can be a problem is there's typically not any kind of vehicle in place to pay the mortgage off except, we'll sell the house. Now, I don't know if people understand the probate process with HMRC, and this can be a very problematic process. But if your estate is set up in a certain way, it can be deemed as a complex estate. Number two, if you don't have vehicles in place like life insurance or life assurance, whole of life, and you're heavily geared with number of properties and it's in your own name, there's a problem because the debts under, I forgot what year it is, but it's Finance Act, I think it's 1983, don't quote me. Or maybe it's 1993, again, don't quote me, but the Finance Act, one of the years, the legislation changed where debt has to now be cleared for probate to be granted. And so where does the debt lie? So you've got mortgages and you've got inheritance tax. Now, landlords typically will have an inheritance tax problem. And we've talked about it over and over again. Nil rate bands, residential nil rate bands. We've done loads of teaching on that. Typically, if you own a property in your own name, it's £500,000 you've got. Most landlords have, especially down south, have assets that exceed that. The difference, I'm being very generic, but the difference will be subject to tax, inheritance tax, 40% of that. And there's another debt. Well, how do you pay it? Oh, I sold the house. Great. Well, in probate, the estate needs to be, a grant of the probate needs to be made to transfer the asset for someone to sell it. Okay. So how does that work? Yeah, inheritance tax is paid within 6 months of a death event taking place. And there's no physical funds. There might be capital, because that's what most landlords say, I'm cash rich and I'm capital rich or asset rich and cash poor. So it's very difficult to realize a property without probate being granted. Yes, you can make an arrangement with HMRC for the inheritance tax, but what about the mortgage? Okay. And then even then you got to sell how many properties before you can realize the wealth? Did you plan to sell all those properties? Did you have all that debt and 40% of the of your income or so your asset wealth eroded? Did you plan for that? And most landlords don't. So I'm saying, well, okay, so what do you want? And then how do you go about doing it? So that's a big, big, big problem I'm finding consistently. And so if they want to keep the property, it's a very generic statement, but landlords don't like spending that much money. And when you're later on in life, life insurance is not cheap. Life assurance is very expensive because it's the whole of your life. And it's like, well, that chunk of change, maybe £800 a month, £1,000 a month, depending on how much you're looking to protect. Yes, it's a good thing in my opinion, but maybe people don't want to spend that money.
Yeah.
And so they're stuck between a rock and a hard place, maximizing allowances. And then we've got another problem that if your wealth exceeds £2 million, your inheritance tax allowances reduce. It's tapered. And so it's another challenge. So how do we maximize your allowances, minimize as much as possible the amount of tax that you potentially pay? How soon should you start this kind of planning? I say no step 10 before you start step 1, but most people don't think about this until the ending of their life. Like, oh, I better think about this now. I better get a will now. I better do this, because the families are getting a bit worried. I know you got all this property, but what's going on? And when normally the problem is leaving it to last minute can be a challenge.
Yeah, and that's why it's just really important as well to start earlier, especially if you're a landlord. So
no, absolutely. So we think getting education out there, awareness out there will help landlords. And the other side is, okay, so I've got a limited company, which is good, but it doesn't negate the inheritance tax situation. It does help with legacy planning in terms of, the company won't die.
Yeah.
The shares can be transferred. Tax has to be paid on that, inheritance tax. The family members can be beneficiaries potentially. Things can be done, but it doesn't reduce inheritance tax. So, and that's just for death planning with a will or other planning. Lifetime planning, depending on how many properties someone owns, is possible. But we've got that dreaded word, the capital gains tax, when you gift in during lifetime.
Yeah.
And then we could talk about trusts, which are great, but they have their limitations. Then there's alternative structures, which is great, but you need to be willing to invest in the proportion of the size of your portfolio and estate. And so hence why the conversation is better to have it sooner rather than later. And it's not on top of that many professional will writers will have, because then they're people not qualified or comfortable enough to address it. So you got to get in front of the right people to discuss that. So let's raise the awareness, which is what we're talking about, isn't it? So do you think we should unleash some potential news, do you reckon? Or to
yes, sir.
Yeah, I think we should.
I feel like if you're still here and you're still watching this podcast, clearly I'm assuming you're very interested in what we're speaking about.
Yeah.
And we want to do as much as we can to educate you, spread as much knowledge as we can. Obviously, Richard is the financial advisor, private wealth advisor. So what we'll do is we'll hold a workshop. We've been thinking about it for a while.
Yeah.
And we would love to have a workshop where we could share this information, educate you, especially if you're a landlord yourself and you have multiple properties that you'd want to protect, especially in regards to inheritance tax, then you need to be there. I think it would be really important, very eye-opening, and it could potentially change your life. You never know.
Does it matter how many properties they own?
It doesn't matter how many properties you own.
Yeah, 1 or 100 doesn't really matter.
It doesn't matter. If you own 1, if you own 2, 3, 4, it doesn't matter. But I think it would be of great benefit to you if you did attend. You'd learn so much value there as well. So we've been thinking about it, and we're thinking of doing it next week, but we will release more information in due time. Hopefully by the end of this week we would have had something sorted out, but we'd like to know if you'd be interested in it first.
What do you think?
So
definitely it'll be online, and there'll be a Q&A, because I'm sure people would like to know more about their own personal situation. Now, obviously limited to how much advice we can give, but my own mindset is, look, let's give as much value as we possibly can. And it's a safe space, a private workshop. We'll be charging for it. We're still working out the pricing, but we're gauging it around about maybe £97 as an early bird, which is great value for a couple of hour workshop on the topic that's really high level. you know, in terms of the hourly rate, we charge sort of $250 an hour. So I think for a workshop where you can get educated and have that material to keep, it's great value. So, but let us know, what's your thoughts? We're keen to find out more, see what you think. If it's something to be really valuable, want to learn more about, then we can kind of make a final decision from there.
Yeah. And just to mention, I know it's already passed, but our 30-day challenge.
Yes,
we started it last week.
Oh, that's going really well.
I know. So we basically it's a month, so we have probably just over 3 weeks
to go.
Yeah. But honestly, it would be of great benefit if you were to join on the 30-day challenge. You know, it's better starting now, even though you missed the first few days. I think it'd be great.
They'll still start from day one. It's just be 30 days from their calendar.
Yeah, from your calendar.
You missed the launch, but you haven't missed out.
Yes.
Yeah.
So make sure to sign up.
Yes, definitely.
It will be really good. And every day you're getting a little snippet of something, which is really great
to think about.
Yes.
Implement.
Yes. So even you don't have to sit there and like read a massive textbook or anything. It's not like that. You just get a little email every day, just to read basically your knowledge bite for the day. You can take it as. But yeah, I think it'd be really great if you jumped on. If you're not on it already, but if you are, thank you.
Yes.
But yeah, I think that's all I need to say today.
Brilliant. Well, look, we'll leave you guys to it. Thank you for your time and see you again next time.
All right. See you next week.
Cheers.